What is the market telling me this week? If you want to become a good investor, it's important to watch the market because winners anticipate and losers react. And if you anticipate what's going to happen next, it really can give you a tremendous advantage. If you wait until the storm arrives, then you're going to be in big trouble. And this is exactly why I'm watching the market to tell me what to do next. I'm your host, and this is the Nick Rutherford Report. So hit that like button, subscribe to that channel, and share this with someone who would get a lot out of it. The big problem most investors have is they think that investors shouldn't lose money. What really matters is that when you do lose money, you lose money small, and when you win big. And that's exactly why we're going to look at what the market is telling us this week so that I can become a better investor by reading what's going on and anticipating what will happen next. And you can too. Let's get to it. This week in the news, there was an article called This Reality Dawns, Initial Jobless Claims Suddenly Spike to the Highest in 9 Months. What does this mean? Well, I'm anticipating eventually at some point we'll have a recession. So I'm closely watching the job market to see if it breaks the signs and the levels that I'm looking for that historically mean it's time for a recession. Frankly, we're just not there yet. So I'm anticipating that the economy is going to chug along and I'm not too worried, at least today. Tomorrow, data could come in and could roll over and things could get worse. And then we'll know exactly what to do, which will be sell, sell, sell before it gets too bad and we sell before everyone else. Now, that's exactly why we want to watch the market and let it tell us what to do. Let's look a little deeper into the data because this came out and it was very interesting. What is this? Well, this is the U.S. demand for gasoline and it is a seasonally decade low according to this article. So if you look at the blue line here, it's lower than any year since 2014. Why didn't they include 2012, 2011, or 2008 for reference? I'm not really sure. But you can see that only during the plague was it worse. And all this is telling me is that the economy is continuing to slow because people buy gasoline. And what you might not think about is that trucks and everything that ships and moves the economy and diesel and all that sort of thing, that the more gasoline that's being consumed, the more the economy is moving. The less, well, the economy is probably doing less. So this is just another data point, and this is exactly why we're watching the market to anticipate what could come next. But before the market slows down enough for us to be in a recession, it could continue to rise. Now, we may not be in a recession today, so I'm going to be invested until I see the signs that the market tells me it's time to seriously freak out. And right now, we're not really at that. But some people think you should freak out, and that's just another way of Wall Street trying to prey on investors' emotions so that they lose more and they sell it exactly the wrong time. Because this has been a big buzz around the internet and from investors that I've talked to this week and my clients. They are all talking about Berkshire's growing cash pile and its hidden message. Well, does it really have a hidden message? Because if Warren Buffett is stacking up all this cash, does that mean the economy is bad? No, it doesn't. All it means that there's nothing that fits his criteria that he can buy. You got to remember, he's a $800 billion company, and I think his cash pile here, it says right here, his war chest surged to $189 billion. Well, there's actually not that many companies out there that are big enough for him to deploy that kind of capital. Sure, there are lots of small companies that have good prospects, but if he's investing $1 billion here, $1 billion there, that really doesn't put a dent into $189 billion. So he really needs to wait for the perfect opportunity. And that doesn't mean that there's some ominous message on the economy. All it means is there's nothing big enough at a good price. So there are plenty of other businesses that are probably at a great price that you should be looking at. So don't let these headlines steer you in the wrong direction, because to me this is just Wall Street trying to tell me to freak out and make the wrong decision. However, there is some interesting data here coming from Tyson Foods, because Tyson Foods warns low-income consumers are cracking under the inflation storm. And this is pretty obvious. Inflation is up, and this goes along with the trend that I'm talking about every week, that it seems like there are two economies. There's the economy of the rich, and there's the economy of the poor. And if you're not on the rich side, then you're in big trouble, because the inflation is really taking a bite out of the average, everyday American's pocket. I know when I go to the grocery store, things are more expensive. They're certainly not cheaper. So you want to do whatever you can to become rich and be wealthy. And that comes down, I believe, to investing well. And you can become a better investor by watching the market. And we're here anticipating what could happen next. Well, what does happen next? And what am I doing about it? Well, there are a few things that I'm watching so that I can know what to do next. So, another interesting article that came out here was the Japanese, may well be caught in a doom loop. Oh no, doom. Well, whatever. What's interesting here is this line where they need to sell more foreign reserves to prop up the currency, which could cause U.S. yields to rise, which causes the yen to weaken further, and so on. So what's interesting here is just that to think about what could happen so we can anticipate. And what I'm thinking about here is if interest rates do continue to rise, that means a few things. It could mean that the housing market slows down even more. It could mean that the economy slows down even more. It could mean that the government spends even more money on interest, which means they themselves get caught in a doom loop that I'm going to talk about in a second. But that could lead to all sorts of things like currency problems, or maybe no currency problems, but just the currency worth less. And that could have big ramifications on things like bonds or just the cost of everything. So for me, I want to look at and anticipate what I would need to do if this sort of thing happens, if the interest rates go up and up and up, or they just maintain at this rate. And for me, I'm going to want to buy good companies that can weather the storm and grow their earnings. Or I'm going to not want to buy up bonds. I'm going to want to hold gold or maybe Bitcoin. We're not really sure what Bitcoin will do, but traditionally gold has done great when there's a currency crisis or people have worried about the currency doing crazy things. And what's interesting to me here is this is just a trend that's developing that I'm watching so I can anticipate what might happen next. When you anticipate, you can really become a better investor. Here, Stanley Druckenmiller, I believe he went on CNBC, and he gives Bidenomics an F. And what does that mean? Why is he saying that? Because he's saying that the government is spending $1 trillion every day. And why is this important? This goes along to the trend here of something that Kira Sokoloff said in the Indian Express, way down here. You probably didn't see it, but he's the founder of 13D Research, and when he says things, prominent investors pay attention, so I think it's worth mentioning. And there's a little thing that he said here. He said, so you have interest costs increasing, and there was a story that recently said, when your interest bill is above your defense bill, the future of your civilization is doomed based on history. And I think that's important to look at because if you're familiar with Ray Dalio, he always says that you got to study the past to predict what happens in the future. And if we want to be winning investors, I want to anticipate what could happen next. And if I look at the federal budget from 2023, here we are. The net interest is at $659 billion, and the defense is at $805 billion. So this is something we're going to be watching closely this year, because if the currency gets worse and worse, that only means that I need to be holding good businesses and things like gold, things that will go up, but I don't want to be holding bad businesses, and I certainly don't want to be holding bonds. But right now, all I'm doing is watching the market so that I can anticipate what happens next and then the market will tell me what to do. So hit that like button, subscribe to this channel, share this with someone, and next week we'll continue to watch the market until we can see exactly what it tells us to do. Because if we do nothing, that's great. It's better to do nothing until I see exactly what to do, and then I'm going to do something. So, until next time.